to the portfolio if you haven't got an entry already. So that's the example there. Humanique is another coin that is kind of aimed with a very big market cap. So in terms of the potential, I always look at what's the potential market cap size of the industry these projects trying to disrupt. And Humanique's interesting because they're trying to bring basically banking to sort of the low tech or the underbanked, unbanked, population. So everyone who hasn't got a normal bank account, for example, in Africa, now the internet connections are coming to connect everyone to the net. That's going to bring this connectivity is going to bring a bunch of people online. They're all going to need to be banked, but the traditional banks don't really have the infrastructure or the means to connect them with banking. So this is something, again, cryptocurrency is going to do much better, much more efficiently. And so I think these guys are well placed to take advantage of that trend. This is a longer term trend, so I'm not expecting these guys to double and triple overnight. But as an example of a holding that's kind of diversified, you can see that's something I think is a good example of something to have in their portfolio for the long term. So that's the second sort of bucket. So again, a third of your crypto portfolio would go into those. You can have more if you want, but the idea is once you've researched something you think has real long-term staying power, you're not really trading in and out that position very often. It's a long-term buy and hold. So again, not much effort required to manage this portfolio. It's very, very simple. Once you have more experience and you have more time, you can tweak these principles to really suit what you're doing. So personally, for me, for example, I hold less safe currencies because I feel I have the time and ability to pick out more of the speculative coins that I think will do well, and I'm able to take that risk because to me it's worth it. I have the time, I have the energy to watch sort of the market more closely, whereas other people just want some exposure and less volatility in their portfolio. So that would you want to have more safe currencies in your buckets. So I hope that makes sense. The last sort of third there again is sort of more advanced. So this is sort of trading bucket where you can actually take advantage of the volatility. So obviously the market doesn't go straight up. We have really volatile moves. You've seen it with Ethereum and even Bitcoin, where the market can come back 30, 40, 50%. And so if you're trading with technical analysis, you can kind of see when these turns are coming. And I'm going to show you some examples of how that works in a minute with some charts. Very interesting. But for example, you might hold just a position in Bitcoin, and then if you see another coin that's going to do better, you can trade into that coin. You can use exchanges like Bitfinex, which even let you trade with margin. So this is a little bit more advanced. I don't suggest getting into this unless you've been into cryptos for a while. You really understand the price patterns in the charts, and you have the confidence to know what you're doing, because it is a little more high risk for sure, and sort of risk return. This is the higher end of that scale. So the safe currencies, I would say, lowest risk, lowest return will still do very well. Second bucket, slightly higher risk, higher return. Again, I like some exposure there because I think it'll do well long term. And the trading, if you really have a lot of time and energy, you can kind of catch some moves even on the downside. When you're exiting and when you're entering, so that you're not buying at the top and selling at the bottom. So this is just an example here where I've left it in Bitcoin because I'm assuming the average person starting out doesn't have the the knowledge to really start trading. So just leave that in Bitcoin, take advantage of that growth in the overall space through Bitcoin. And so this portfolio we put together a couple weeks ago. You can see I've been tracking just the weekly returns. The overall market cap is actually down quite a bit. So when we put this portfolio together, like I said, we weren't trying to time it in terms of when's the best time. We're just saying if we just have this money this capital to invest, we're just going to stick it away long term. Just dump it in everything from day one. This is the strategy. It's a very, very basic strategy. So since we did that, obviously the market cap has gone down quite a bit, about 14%, and Bitcoin itself has gone down about 6%. So you can actually see what's interesting when the market's in a correction. A lot of times Bitcoin will outperform because money will rush back into Bitcoin, and this is something you can track using the Bitcoin dominance chart. So I'm going to come to that in a minute, but it's actually a very useful indicator to know where are we in the market. If the market is outperforming Bitcoin, that usually implies we're in an uptrend overall in the whole space, and the whole market cap is growing. And if Bitcoin is underperforming the market, if Bitcoin is outperforming the market like it is here, Bitcoin's down only 6% versus the market is 14%. So in that case, this is a correction where more money is flowing back into Bitcoin generally as a safe option than into the rest of the market. And then I put the S&P 500 here, which is the best performing stock market for the last few years. Obviously, U.S. market there, a lot of international money flows into that particular market. So as a comparison to your other investments, like I said, maybe you have 10% in cryptos and the other 90% you have in stocks, bonds, properties. This gives you some example of how well Bitcoin and cryptos generally can outperform because of the growth phase we're in right now. So very, very early stage. I'm not going to get too much into this, but the example, the data's all here. You can go through that and just see how you would have done if you'd picked some coins a few weeks back. Even though the market's down, our portfolio is up 10%. And so this is really because we've got exposure to some of the coins that are doing very well in the second bucket, even without doing any trading. We're up on the market. We're outperforming, everything else. So this is really where we want to be. It's a great example of what this portfolio, this strategy can do for you with very little effort. And personally, I don't do this myself. I don't just dump everything. I try and time it a bit smarter so the returns can be even better. If you're buying at the bottom, Bitcoin bottomed out to $2,200, I think, a week or two ago, and I posted that in the group before it happened. So that would be an opportunity. When you buy in at a much lower price, obviously, you would get a better return. So this is, worst case, just buying and holding long term. So I hope you guys have a clearer idea now how to start putting your portfolios together. Like I said, the first bucket you really keep on the cold wallets as much as possible. You need to research whatever coin you're buying, what the cold wallet options are, make sure it's something secure. Don't leave it on the exchanges. You don't need to because you're not trading in and out. The speculative coins as well. Some of these I hold on Bittrex because I haven't yet researched all the best cold wallet options. And for example, Veritasium is not even trading on an exchange, so I hold that in my Ether wallet, which is also a cold wallet. But sometimes I keep it on the exchange just in case I'm trading in and out. But it's much less likely with the second bucket you'll be doing that. So only if you're really, again, watching the market much more closely, and then you'd want to have more liquidity, more access to the market, then you might keep some of it on exchange. And the last bucket there, the trading account, you might keep that in Bitfinex or Bittrex, where then you can access the market when you need to. And I always recommend to have 1 or 2 accounts, trading accounts open, so that if, for example, something goes down, your exchange goes down, it happens a lot during volatility, you're not just frozen out of the market, you can actually get in through another account, and that's really important if you want to take advantage of the moves during that volatility. So that's what the first thing I wanted to cover. I hope that makes sense to you guys. Again, if you have any questions, let me know. I'm happy to go through this again. But this is a very, very simple baseline. You want to get to this place as soon as possible, so you start to benefit from that capital appreciation, and then as you start to learn more, you can obviously add more coins into that second bucket and maybe do a bit more trading, a few weeks, months down the road, depending where you are. I think some of you guys are already doing that, so that's great. And I've actually set up different Slack channels for each of these buckets so that you can really focus on whichever one you need to get done first. So don't look at the trading bucket and don't look at the Slack channel for trading until you've done these first two and you're really happy that you've got a good allocation and you're set with the wallets and everything is there and it's secured. And I kind of go through all these in the resource guide. So check that out again if you're not sure how to execute, and ask me any questions. So that's the sample portfolio. I want to spend a bit of time just looking at a market recap, and I put some posts in the Slack channel. So if you look at the Mastermind calls channel in Slack, I put some charts up here. I want to run through these to really show you guys how the market's doing. This is something, once you learn how to look at the markets, it's really useful to know where we're going in terms of general momentum, and then you can start to drill down on some of the coins you actually want to invest to see some of the price patterns they're in. Is it a good time to buy or not? Like I said, there's always going to be corrections. There's always going to be 40, 50, 60% corrections. So I never like to chase the highs. I always like to buy when the market is bottoming. And actually right now is a good example of, when the market is kind of near the support. Right now, if you look at let's look at the chart here. I'm just going to pull it up. I can show you some stuff on here. So I use coinmarketcap.com because it's got these global charts in terms of tracking the overall market cap of all cryptos. You can chart this and you get some very interesting data. So here's the first one, total market cap. If you scroll down, you see there's one chart here without Bitcoin. So this is very interesting because there's some divergences, and I'll talk about that. And then at the bottom, you've got this Bitcoin dominance chart. So this is, what percentage of the whole market is just made up of Bitcoin. And you can see, like I said, the real growth started to come early this year. And that was when, as a percentage of the whole market cap, Bitcoin really started to fall. And that meant a lot of other capital was flowing into the newer coins like Ethereum, these sort of infrastructure application layer coins where the growth is going to be. And this is really what took off. And at the moment, the market's kind of consolidating. You can see that Bitcoin dominance has gone up a little bit. So that's what I mentioned, where the market is kind of correcting, and some of the capital goes back into Bitcoin just as a safe currency to hold. That's a very good sign we're in a correction when the Bitcoin dominance starts to, stall or even turn back up. And so I put some charts together based on this, and I want to kind of show you some interesting turning points, some interesting things you can take away. You can see here on the top of the charts, you can actually look at different time frames. So usually I look at the 3-month or the 1 year, just because it's a lot easier to zoom in and actually see what's going on. And you can do technical analysis on these charts just like any other stock chart in terms of support, resistance, Fibonacci ratios. Those are the two that I use the most. You can't do too much on this particular chart because it's not within a trading platform, which is a bit annoying. But so far as I know, this is the only place you can get the data right now. So you can actually see we're trading around $89 billion on